Let's start by getting our bearings. On the vertical axis, we have the wage rate. On the horizontal axis, we have the number of workers employed. This downward sloping curve here is MRP, marginal revenue product of labour. This upward sloping curve labelled S equal ACL is the labour supply curve, which in a monopsony is also the average cost of labour. And this steeper curve above it is the marginal cost of labour, or MCL. Before any union exists, the labour market is monopsonistic. The firm chooses employment where MRP equals MCL, not where supply meets demand. That happens at point A, giving employment of L1. Once we know L1, we drop straight down to the supply curve to find the wage. That's point B, which gives us wage W1. So without a union, employment is L1. Wage is W1. This is lower pay and lower employment than in a competitive market. Now the trade union enters the labour market and sets a minimum wage of W2. This immediately changes the labour supply curve. Instead of rising smoothly, it becomes kinked. This line here labelled W2XS. Up to L2, workers are willing to supply labour at exactly W2. Beyond L2, the firm would have to raise wages further to attract more workers. So this kinked line is now both the labour supply curve and the average cost of labour, ACL. Here's the key bit, and this is where most students get stuck. Up to L2, hiring an extra worker costs the firm exactly W2. No wages change, so MCL equals W2. But if the firm tries to hire more than L2, it must raise wages. And it must raise them for all workers, not just the extra one. That causes a sudden jump in the marginal cost of labour. This jump is shown by the vertical gap from X to Z. Beyond that point, the MCL curve slopes upward again, shown by the line ZV. That's why we say the MCL curve is double-kinked. The firm still follows the same rule as always. Hire labour where MRP equals MCL, but now MCL has a gap in it. The MRP curve intersects this gap at point C, which corresponds to employment L2. So with the union, wage rises from W1 to W2, employment rises from L1 to L2. This is the crucial AQA result. In a monopsony labour market, a trade union can increase wages, increase employment, even though the MRP curve has not shifted. This happens because the union prevents the monopsonist from restricting employment to keep wages low. In an exam, always make it clear that this result depends on the market being a monopsony. In a competitive labour market, a union is much more likely to reduce employment.